No more lockdowns. Italy joins France and Spain in ruling out another nationwide shutdown, despite rising cases in all three countries. Global infections passed 24 million. And Laura makes landfall. The Category 4 hurricane hits Cameron, Louisiana, causing extreme winds and flash flooding in the state. Matt.
Let's take a look at futures. We've seen European equity index futures bouncing back and forth between gains and losses, but they are, for the most part, green right now, with the exception of the IBEX 35 in Madrid. As the cash equity trade kicks off, let's pull up the global macro movers screen and check out the left-hand column there. Each index will populate the left-hand column as it goes live. The FTSE almost always the first to kick it off, gaining but only 0.03% right now. The OMX in Sweden, which is in Stockholm, which is, I think, one of the few indexes in Europe that actually is positive year to date, also gaining 0.2%. We're almost there on the DAX, as Anne-Marie was just telling us. The DAX, you can see, just opened up, gaining 0.1%. Not a lot of movement right now, down about 3 or 0.4% year to date. Meanwhile, most of the other European equity indexes, which are also opening up a little bit higher right now, are down like 15, 20, 25% year to date. So that's why we find that quite interesting. European markets basically flat, though, on today's trade after the global equity rally stalled as well, ahead of a speech from Fed Chair Jerome Powell later on. Joining us now is Viraj Patel, our CARA head of macro and geopolitics research. And Viraj, there's no reason to focus necessarily on the little change in equity indexes today when we see all-time highs for the S&P 500, for the NASDAQ, for the MSCI World Index. Why, after an economic collapse, as countries around the world are taking on a record amount of debt and millions and millions of people have lost jobs, are we seeing indexes at these record highs?
Hi, so yeah, I think the main support channel has come from central banks. If we look at this week, again, what you're seeing, despite the rising nominal treasury yields, real yields have drifted lower, again, in anticipation of Powell's speech at Jackson Hole today. So the equity market continues to benefit from lower real yields, both in the US and across the world. And I think they're looking for more support from central banks going forward, especially in terms of new innovations for forward guidance, to keep rates at record low levels, to keep that put in place for equity markets.
Viraj, good morning. So with that in mind, with the level of support from central banks so in focus, what do you expect to hear from Jackson Hole? Some people are, it seems, really downplaying the significance of this, suggesting it won't be earth-shattering, any new guidance or movement in the inflation, in the suggestions of how they would move around inflation targets in the United States. What are you expecting?
I do think we could see a risk of a disappointment from Powell's speech today at Jackson Hole, largely because of the way that markets have been positioning ahead of it. As I mentioned, real yields drifting lower. Despite rising nominal treasury yields, that suggests the extent to which inflation break-evens have been moving higher in anticipation of the Fed potentially shifting to average inflation targeting, for example. So there is some expectation priced in, especially in the FX markets. If you look at break-evens for euro-dollar, they're at the highest ahead of any Jackson Hole event prior to 2015. So certainly more expected from Powell today. I don't think the speech itself will lend itself to any clues, given the lack of consensus we had at the July FOMC minutes. I think it might be more academic in nature, assessing the pros and cons of the various forward guidance policies on the sort of tap. But I think it might just be enough to keep that idea of average inflation targeting that the market has been pricing in this week and in recent weeks on the table.
Good morning, everybody. Welcome to SG Trader Live trading channel. I'm placing an order to sell short euro at 118.306. The place to sell short 118,306.
Thing for 2021, but the reality is the sustainability of hitting the 2% target. I think that's the Fed's biggest, and probably every single central bank's biggest concern since 2010. So when we're stuck in this low-inflation environment, the only channel that central banks can do is effectively throw the kitchen sink in terms of monetary policy. We've seen that with innovations in terms of record low policy rates, QE, and now innovations in forward guidance to help markets bring back some credibility to the Fed and other central banks across the world, hitting that 2% target on a sustainable basis. So that's where the real next challenge for central banks lies, restoring credibility on that 2% or various central bank inflation targets. And that's why we're seeing a huge discussion on these innovations in terms of forward guidance. Things like YCC are more explicit but have problems with exit strategies. Can the Fed credibly communicate to the market that they will allow inflation to run above the 2% target for a sustainable amount of time, bringing price levels back on track to the growth level that they were pre-crisis? That's the key message that the Fed have to communicate in the next couple of months to restore some credibility.
But that almost makes it sound simple, Viraj, that if the Fed just says, right, we'll let inflation run hot, we'll let the US economy run hot, then, there you go, inflation will rise. If you can't drive inflation at 4% unemployment, isn't it going to be a lot harder to drive inflation at 10% unemployment?
Sure, but I think this, from a central bank perspective, that's all they can do. I mean, there is a huge demand shock. The central bank doesn't control the demand side of the economy. It can only control the monetary side of the economy. So to some extent, all it can do is avoid choking the economic recovery. So central bank policy, that's where the narrative and the discussion will be. Sure, more may need to be done on the fiscal side across the world, especially in the US and Europe. So I don't think we're done in terms of fiscal easing, but again, debt concerns are the flip side. So there's always pros and cons to when it comes to providing stimulus.
I have to remove the order to sell short. As you can see, it moved too fast. Yeah. So better time soon. I'm removing this order to sell short.
Are there any long shot comments you think he might make? Surprises he could give the market that you'll be watching for?
I think the likelihood of yield curve targeting YCC or YCT, whatever you wish to call it, was ruled out after the July FOMC minutes. But I do think there were few core members of the Fed committee that do see the merits of YCC, YCT. I think if we do go into that world, that could be the most effective, the most, I would say, dovish that Powell could come out today if he hints that is not formally ruled out and that the Fed is still strongly considering that. I think you could see US yields really drift lower. I mean, the debate could continue, but that's the real dovish end of spectrum. I think the surprise could be if the YCC is brought back to the table.
Viraj, thanks very much. Stay with us. Viraj Patel, Alkera's head of macro and geopolitical research, talking about Jackson Hole. We'll get further thoughts from him shortly on what's going on with FX markets. We're keeping an eye on what's going on with Hurricane Laura as well. It made landfall near Cameron in Louisiana, one of the region's worst storms in history, threatening to devastate the U.S. Gulf Coast with flash floods, powerful winds. It could leave parts of this state uninhabitable for weeks or months. What kind of loss of human life we're going to see? Most people surely got out of the way of this. It was described as unsurvivable. So hopefully not too much of that. But we will certainly follow the human side of this story, but also keep an eye on the devastation to property as well. Coming up on the program, we'll get back to Viraj. We'll talk about what's going on in FX markets. Which countries are the most resilient to FX strength? Clue: it is not the United States. We'll discuss next. This is Bloomberg.
Welcome back to the European Open. We are 11 minutes into the session right now. You're looking at red arrows. After a slight upwards open, we're seeing a slight drop in the cash trade right now. The FTSE down about 0.25%. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright. Laura?
Thanks, Matt. The US has accused HSBC of aiding the Chinese government's clampdown on Hong Kong. Secretary of State Michael Pompeo says the lender continues to provide services to people sanctioned by the US. He also cited reports it had blocked executives of Next Media from accessing their accounts after the arrest of founder Jimmy Lai. No comment from HSBC. The UK may impose restrictions on TikTok's activities in the UK, but it is likely to stop short of blocking plans for the firm to set up an international headquarters in London. Sources tell Bloomberg the government will likely decide the app doesn't pose as big of a security threat as Huawei, but it may still stop TikTok moving user data out of the country. London's Gatwick Airport is planning a restructuring that could see the loss of another 600 jobs. That's nearly a quarter of the remaining workforce. It comes after some of its biggest customers abandoned operations there. It has already scrapped nearly 800 posts, though voluntary exits and halting of short-term contracts. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thank you very much. Laura Wright here in London. Now, the dollar is halting its two-day losing streak as traders await Jerome Powell's speech at Jackson Hole today. It's the first time the conference will be held in virtual form, and we will all miss those stunning views of the mountains. Viraj Patel, our care head of macro and geopolitical research, is still with us. And Viraj, you've been doing some interesting research on just how resilient certain economies are to a strengthening currency. And no surprise, some of your concerns around resilience focus in Europe, in Switzerland and in the Eurozone.
Yeah, our recent sort of FX strength aversion index pits the Swiss franc and the euro as those that have faced the greatest risks of seeing pushback from officials over further FX strength. When you look at the euro, I don't believe that this is just a dollar weakness narrative here. I think you look at the euro effective exchange rate, both on the nominal side of things and the real side of things, they are at sort of 6-year highs. And if they were to stay at these levels into year end, then on a year-on-year basis, the real effective exchange rate will be 5% higher on an annual basis. I don't think that's a disinflationary impulse that the ECB can afford, given the severe deflationary risks already stemming from the COVID crisis. So, yeah, when we look at the strength aversion, we also look at the relatively high trade to GDP share of Europe. We also look at where core CPI is relative to this central bank's target, and that really puts the euro at risk of seeing sort of greater pushback from officials over FX strength relative to the rest of the G10 space. So we saw the first hints of this really last week in the ECB minutes, the July ECB minutes, and it's worth noting that euro dollar was much lower and the effective exchange rate than it was in July. So I think September is going to be crucial in how the ECB frame the euro narrative and talk about its sort of comfort levels with where the euro is right now.
Do you think that policymakers here are concerned the common currency could be too strong and hold back the economic recovery?
Yeah, it's similar to rates pricing in a recovery faster than where the central bank wants. So the same with the currency. And I think when we think about forward guidance innovations and messages like lower for longer rates, they do have an underlying currency angle to them, more so given the FX impact on inflation. We talked about central banks struggling to even hit 2% inflation. When you've got a strong currency, it makes it even harder. So I do think the currency plays a big role in the way that central banks frame policy going forwards. I think we could see risks of greater soft jawboning, either rate cut threats like we saw in New Zealand, or tit for tat increases in central bank balance sheets just to stop currency appreciation. I think that dynamic needs to be factored into FX markets over the next 3 months.
And what clues should we look at, Viraj? You're someone who's watched central banks for a while and focused very much on the language that they use. The ECB, when it gets concerned about the strength of its currency, if we get to that point, what will be the language that they will use to flag that to markets?
For me, it's the usual unwarranted tightening of financial conditions. We've seen that before in ECB comms, I don't expect them to ever talk about the euro, its level, or explicitly about where it thinks it should be, because of the geopolitical ramifications of that. But certainly the hidden messages in the comms, both the September meeting and the subsequent press conference, will be very important. And if we start to see more language like there's an unwarranted tightening of financial conditions that could stem the economic recovery, that to me is an implicit sign that the ECB are not happy with where the euro is on a trade-weighted basis versus its major trading partner.
I want to ask about the pound, which has also seen some relative strength of late, even though the UK has clearly got problems, bigger problems than other countries in terms of the coronavirus and Brexit fast approaching with little progress in negotiations. What do you think about the pound going forward?
Surprisingly, the short-term dynamics for me in sterling are actually quite supportive for two factors. One, the markets are very short, relatively short sterling versus, say, the euro, and we haven't seen the full short squeeze yet manifest itself. So there's still room for cable to sort of move higher in the next couple of weeks and months on that. And secondly, what's really interesting and probably unique to the UK is the extent to which central bank or investors have aggressively discounted a rate cut in the UK versus anywhere else in the world, apart from New Zealand more recently. So that to me also looks like a mispricing, suggesting that markets see either the Brexit risks or potentially the UK service sector economy being a laggard in this recovery that could be tested. So both the pricing out of potentially negative rate bets in the UK and the short squeeze, for me, in the short term, could see cable a bit supported around these levels. But for me, it's euro sterling, where I like seeing that moving lower, much lower below the 90 handle, potentially towards 87, 88.
And when you look at FX aversion, Viraj, and when you look at countries that, well, really the strength of the currency matters little, which are those countries? I suppose they're the ones that that don't trade as much as others, or don't import as much as others. What's the story?
Yeah, I think a lot of, apart from the US, every small open economy has a high reliance on trade. Really, it's where the effective exchange rate has been. And if you look, for example, like Australia, you would expect that to potentially be on the higher end of the FX strength aversion index, but it isn't, because the actual trade-weighted Aussie has actually been weak in the past couple of years and actually sits below its historical averages. So currencies like that, and that might also be the reason why we're not seeing too much pushback from the RBA on where the Aussie dollar is right now. So those currencies, as well as the pound and even the yen to some extent on a trade-weighted basis, those are surprisingly where they lie in the lack of sort of great, we don't see too much risk of pushback, at least from a macro perspective. But as I mentioned in my note, theory is great, but at some point, central banks do not take theory into account, as we see with New Zealand. Even though they don't need to push back on the sort of strength of the Kiwi, they are doing that very vocally in recent weeks and months. So I don't think any central bank right now really wants to foot the cost of a strong currency. I'll be watching very closely for how central banks communicate on currencies in the upcoming round of meetings in September.
All right, Viraj, thanks so much for joining us. Appreciate your input this morning. Viraj Patel is the head of macro and geopolitics research at Arcara. He's going to be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time. You can tune in for that on London DAB, or you can just Google Bloomberg Radio, or you can go to radioplayer.co.uk and probably link through a number of different movements to Bloomberg Radio there as well, if you like. Coming up, the EU trade chief, Phil Hogan, quits after growing criticism that he broke virus regulations in his native Ireland by going to a golf dinner. We'll be live from Brussels to discuss the latest. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, half hour into the session right now, and we're looking at markets so far that are down just slightly. Let's take a look at the broader Euro 600, Euro Stock 600 index right now, down 0.2%. So not a huge drop there, but you don't really get as much insight into what's going on unless you look at the GRR screen. So for the group ranked returns, the industry groups that are moving around this morning, let's go ahead and pull that up on the screen and take a look at which individual industry groups are moving the most. Here you see travel and leisure, a big gainer, and auto parts, automakers and auto parts also big gainers. So the stocks that have gotten hit the hardest by the coronavirus pandemic are doing well, a little bit of a recovery today. You do see banks doing the worst, as well as real estate, telecom, and oil and gas. So kind of a mixed picture in terms of the industry groups as well as the overall index. Now, NATO Secretary General Jens Stoltenberg is here in Berlin today to have a bilateral meeting with the German Chancellor Angela Merkel. The meeting comes in the midst of two
new order placed to buy at 105,996. I'm placing an order to buy at 105,996.
Let me first ask you what you think Merkel is going to say to Stoltenberg about, Vladimir Putin in terms of backing Belarus and in terms of the alleged assassination attempts around the continent.
Well, I think she will make it very clear to him that this is a completely unacceptable operation or incident. I think she will also remind him of the fact that Russia has moved against opponents and critics in the past, including an assassination here in Berlin of a Georgian citizen last year. So I'm pretty sure that this will be a point that she makes very clear to him, that it is completely unacceptable that critics, opponents in Russia, even beyond the borders of Russia, cannot feel safe.
And we're looking for Chancellor Angela Merkel and Jens Stoltenberg to start speaking this morning. We'll bring images of that as we get them. Let me ask you, good morning to you, Jörg. Let me ask you what Russia wants to see in Belarus. Do you think Russia has concluded that it is time for Lukashenko to step aside, or is Russia convinced it can assist Lukashenko to stay in post?
Well, frankly, I think we don't know exactly, and perhaps even Russia itself doesn't fully know. I think the Kremlin was taken by surprise by these developments. I think they expected Alexander Lukashenko to assert his presidency in those elections, if you want to call it that. But they did expect him to come out weakened, given growing social discontent. Now they have a situation whereby his future in the presidency or in the leadership is in question. And I think to some extent they're struggling to find a response. Over the last 2 weeks and a little more, we've seen quite ambivalent signals coming out of the Kremlin. On the one hand, Putin congratulates Lukashenko the day after the elections. On the other hand, there is very open criticism of how Lukashenko handled these elections, the police brutality that ensued afterwards. So at the moment, I have the impression that Russia is still defining its response. It has already dispatched people to Belarus to influence on the inside the situation of the country. But frankly, at the moment, no one knows exactly. I think there is a clear expectation that Russia will interfere in the further course of these developments. And many of us, frankly, are just hoping that this will be a constructive engagement, perhaps through a multilateral format like the OSCE.
I offered new position for Japanese yen at 105,996.
Of Stoltenberg and Merkel speaking. Merkel kicked it off talking about the concerns they have surrounding Turkey and Greece right now. Indeed, Jörg, that's a very worrying topic, probably more worrying in terms of the fireworks we could see more immediately. What do you think we're going to see as Greece aims to extend its borders into the Mediterranean, and Turkey says, you know, any country that's messing with it should be worried about its further existence?
Well, what we've seen in the last weeks is a lot of unilateral action by either side in this dispute. The German government has been trying to mediate here, but apparently to no effect so far. This is obviously a very tense situation, especially also in the context of the visit of Stoltenberg in Berlin today, because both are NATO members. Both are countries that have an uneasy relationship, but do find themselves in the same security alliance. So for that reason, I fully understand that this is an issue very high up on the agenda in the talks today. At the same time, I'm a bit worried that this may completely overshadow what is happening around Belarus and on the eastern flank of NATO.
Yes, and getting back to the stories around Russia, I mean, there are many reasons why Germany and Russia have a tense relationship at the moment. The attempted cyber attack on the Bundestag, Belarus, and now the issue surrounding Navalny. I mean, why do you think that Alexei Navalny was allowed to leave, or he was allowed to leave the country at the insistence of his family and friends for treatment, Jörg? The Russians could have stopped him leaving, perhaps.
Well, there's various interpretations to that. I mean, one is obviously that the Kremlin took to damage control in this situation. They've seen the risk here of this even more seriously impacting the already bad reputation that Russia has for its approach to any critic and opponent.
Right.
And as I mentioned before, there have been serious incidents with regard to Russian critics and Kremlin opponents in the past. So one explanation may simply be its damage control.
And not seriously successful attempts at assassinations, if indeed that was the case, right? I wonder, after all of this, you know, Merkel has confronted Putin about the annexation of Crimea, but in the end, Germany didn't really do a lot about it. Merkel has confronted Putin in terms of the alleged assassination attempts, but really hasn't done anything about it. Now Merkel is concerned about the violence in Belarus. And at the end of the day, Germany is still essentially, at least partially, funding Vladimir Putin's antics through Nord Stream 2, or intends to, hopes to help send him money for that pipeline. Why do you think the Germans continue to, I mean, is it just the fact that they want access to cheaper energy? At the end of the day, is cheaper energy worth allowing Russia to do the things it does?
Well, I think energy is obviously an important item for Germany. This is a country that has very few resources on its own, except for renewables. So the German economy and industry does depend on a serious portion of energy imports. Russia, and prior to that, the Soviet Union, have been reasonably reliable energy suppliers. So I think there's quite some inertia in all of that, not just in German politics, but also in German business. At the same time, I think that what German politics completely underestimated is how politically charged, especially that pipeline, Nord Stream 2, is. It could have known better, because there is a pipeline called Nord Stream 1 that was already controversial with Germany's neighbors to the east. Nonetheless, it decided to move ahead with that second pipeline. I think it completely underestimated how much of a political liability this will be, and it has severely damaged German credibility, because what it adds to is an utter contradiction. On the one hand, Germany is a strong supporter of its eastern neighbors, also of developments in countries like Ukraine. Germany has also been outspoken in solidarity with the Belarusian people in recent days and weeks. And at the same time, it basically bolsters Russia as a regional hegemon that reserves a veto right in the affairs of countries like Belarus and Ukraine. This is a contradiction that so far nobody in Germany has been able to undo.
Thanks so much, Jörg. Thanks for your time. Thanks for joining us. Jörg Forbrick, Director for Central and Eastern Europe at the German Marshall Fund of the United States. It is 8:40 here in London, 9:40 if you're in Paris or Berlin. Coming up on the programme, we will bring you some of the movers, some of the stocks on the move this morning. We've got big moves on some of the big UK names, the likes of Rolls-Royce and WPP. More on that next. This is Bloomberg. Welcome back to the European market. Opened this Thursday morning, 43 minutes into a trading session that's negative, but just down by 0.2% on the Stock 600. Right now, the Xetra DAX doing its best to keep its head above water, but essentially these markets are under pressure just a little bit as we head towards the Jackson Hole Symposium. Now, the economic fallout from the coronavirus pandemic has devastated the luxury fashion industry, just as it has devastated many others, not least because government-mandated shutdowns have kept stores around the world closed for months. But Louis Vuitton menswear artistic director Virgil Abloh is optimistic about the sector. He told Bloomberg's Anne-Marie Hordern it's a time to show resilience.
The idea of us shopping online has sort of modernized or updated how people can interact with luxury. You know, I found ways to sort of make the digital space a sort of new highway to add, you know, impression and transfer desire.
Do you think the luxury fashion cycle, though, makes sense? And from a consumer point of view with the pandemic, but also even just the idea of sustainability?
Well, that's what my last Louis Vuitton collection tackled. You know, I recently just showed in Shanghai a show that had an unprecedented amount of views, and I challenged and modernized and updated this notion of consumption or how we can sort of be more sustainable in our creative approach. And those things were on the runway last week, and then they'll be in the ecosystem of the retail network starting in January.
I'm glad you brought up your Shanghai show because I want to ask you about that. It is what, the second week of August? It's not Fashion Week.
Yeah.
You had this show in Shanghai in the middle of a pandemic. Are seasons, is seasonality a thing of the past?
Well, I would say there's a modern epiphany about like strict seasons. You know, that model had been added to the fashion calendar in a different ecosystem, and now we live in a much different world. So I think the nimbleness and I think the ability to adapt and to sort of understand the timing of clothes being delivered to the retail floor, the timing of being showed, is a new highway to think of new ideas and modernize. And thankfully, with the opportunity I've been given at Louis Vuitton, I'm able to think of those ideas and enact them.
Do you think in the future going forward, where you see strong sales growth is where you might just say, all right, let's give ourselves a few months, but let's have a show there? Do you think that could start dictating where you start showing your collection?
Indeed. You know, a large format of what I did was showing in Shanghai is sort of removing this idea that ideas have to emanate from Europe, you know, they have to emanate from Paris. And already it's a great freedom to say, you know, we're a global brand. These brands that I operate, you know, exist in different ecosystems. And we're celebrating the local sort of heritage by bringing the collection in those places and showing them locally there.
So would you say that fashion weeks are now obsolete?
I wouldn't say that fashion weeks are obsolete. You know, there's a charm, there's a history. You know, that's the epicenter of the trade that I love comes from. But I think that there's opportunity to sort of share that energy around the world.
You also said that being able to do the Shanghai show, I'm pretty sure you said this on that Instagram I was talking about. It's now digital and more democratic. There's no guest list. In that sense, do you think the pandemic can force the industry to become more inclusive and more welcoming?
100%. You know, I think what we've learned through this year is that there's like subtle things that need to change about how we, you know, interface with the customer and interface with the world. And, you know, I'm one to believe that inclusivity is an important trait that I can embed in my work. That's what I've built my career on. And, you know, I believe that that's a positive way forward.
And that was the Louis Vuitton menswear artistic director Virgil Abloh speaking to Bloomberg's Anne-Marie Hordern. Now, up next, as offices fill up slowly, workers return slowly in city centers. Commercial real estate is stuck in limbo. We'll speak next to the CEO of FTSE 250 company Sirius Real Estate about the opportunities afforded. This is Bloomberg.
Stop on profit for Japanese yen at 106. Actually, let's see. Stop on profit. I'm going to wait. Yes, guys, I'm going to wait until it will move further. I will not place right now stop on profit on Japanese. Okay, let's watch it.
Welcome back to the European Open. 50 minutes into the session and looking at mixed equity indexes right now. But I want to talk about a different asset, and that is commercial real estate. The market is in, obviously, a COVID-induced limbo right now. Airbnb has become the latest tech giant to extend its remote working policy through to 2021, regardless of whether its offices reopen. And the drastic shift to working from home means that even big banks with prime real estate in New York City and London are rethinking their real estate strategies. Canary Wharf Group's detailed plans for socially distanced elevator use means that only 2,700 people an hour can be shifted into each office. To fill the entire capacity of One Canada Square would take just over 3 hours, or you could just take the stairs if you're fit. So Sirius Real Estate is hoping to turn attention to out-of-town offices and more flexible working environments. Joining us now is Andrew Coombs. He is the CEO of FTSE 250 listed Sirius Real Estate. Andrew, thanks for joining us on the program. What's your take from your business standpoint? I mean, how have you seen business affected by COVID-19?
Well, good morning. I think where offices are concerned, COVID-19 is going to be very much a tale of two areas of the city. You know, you've spoken about the challenges of high-rise buildings in central business districts. What Sirius specialises in is business parks on the edge of town, and about a third of the space inside those business parks is offices. And typically, because those offices are on former industrial estates, the buildings are no higher than 2 or 3 stories high. You've got much higher ceiling heights, much bigger windows. You've got a very different environment with completely different challenges to the challenges that you describe in high-rise towers in the centre of business districts.
Andrew, so as a result of that, are you seeing increasing demand for the types of real estate that you offer? And if so, is that coming from small, medium-sized businesses that you previously served, or are big businesses also looking to move to these kinds of locations?
So we are seeing more demand, and at the moment, the demand from small businesses is converting into new leases. We are seeing more demand from bigger businesses, but we're yet to see those bigger businesses actually sign on the dotted line and take out new leases. But what we are seeing, for example, when we look at Google Analytics and the trends in and around Germany, is we're seeing a lot more inquiry trends for open areas. For example, both on the edge of city and also in the centre of city, we're seeing more people look for balcony space, roof space, outside space. And of course, business parks on the edge of town have got plenty of that. But we can actually see how people using offices are changing in terms of what they're looking for.
Yeah, unfortunately, I mean, in Berlin, as in much of Europe, you just don't see the kind of high-rise buildings that you see in New York or even in the city. And I've seen some incredibly creative solutions to social distancing here. Is Berlin a standout for you?
Yeah, I think Berlin is. I mean, Berlin is very creative. You know, the workforce in Berlin is far more multicultural and international than it is in some German cities. And, you know, where Berlin, areas like Leipzig and Dresden are concerned, you tend to get more innovation than you necessarily would in some of the more traditional German cities. But the whole concept about being on the edge of town and being in industrial properties is really the densification of workspace. You know, in the centre of town, people have for years been crammed into elevators, to buildings. On the edge of town, there's a lot more outside space, a lot more open space, and generally the buildings themselves tend to have much, you know, higher ceiling heights. They tend to be a lot more spacious. What we're finding is that people are feeling a lot safer in those kind of environments in a post-COVID world.
Just briefly, Andrew, you're looking to expand. Where will you be doing that?
We'll be expanding in Germany. We were looking to expand prior to COVID-19. we will continue to look for that expansion. And in some ways, COVID-19, has affected that, in as much as the kind of expansion that we will be looking for will be driven very much off of the change in tenant demand that we see as a result of the COVID crisis.
Andrew, thanks so much for your time.
Andrew,
good to speak to you. Andrew Coombs, Sirius Real Estate's CEO. Really fascinating story there, Matt. European equity markets in limbo, really. A bit of a downward move for European stocks, but not much. Waiting for Jackson Hole later. Also focused very much on Hurricane Laura. It made landfall at Cameron, Louisiana. It moves inland. This is Bloomberg.
Hurricane Laura makes landfall. It's one of the most powerful storms to ever strike Louisiana. Damage could cause more than $15 billion in insured losses and leave areas uninhabitable for months. Jackson Hole goes virtual. Fed Chair Jerome Powell gives an update on the central bank's framework review. We also hear from the Bank of England Governor Andrew Bailey and the ECB's Philip Lane. And NBA walkout grows. The boycott over the police shootings has spread across U.S. sports. Teams in baseball, the WNBA and Major League Soccer join in solidarity. We're going to have the latest on the protests. Welcome to Surveillance. I'm Yusuf Gameluddin in Dubai. The global stocks rally then stalling just a little bit as we count down to the Jackson Hole deliberations, the highly anticipated speech by the Fed Chair Jerome Powell. Here's the state of play in global markets. You're looking at European stocks a little bit lower, dragged down by Rolls-Royce. In particular, U.S. equity futures are lower as well after the record highs that we've reached throughout the week. U.S. 10s, we are at 68 basis points. I mean, look out for that 7-year paper later on in the day. We might get some more traction off the back of that. In the FX space, wow. I mean, if you're looking for a quiet complex, it is the currencies at the moment. The move's very contained. The dollar just barely halting a 2-day loss. Your euro dollar 118.34. And then WTI in focus. At the moment, we're just a little bit below the flat line. But bear in mind, the level at the moment is a 5-month high with Hurricane Laura menacing U.S. refineries. We're looking out for live images from the area to get a better sense of the potential damage that might be inflicted. Morgan Stanley says that the extent of the impact on oil refining will be evolving in the coming weeks with the risk of higher or extended outages. Mandatory evacuations are in place in some of the coastal areas. We're looking at live shots now, actually, from Galveston in Texas. Of course, the heart of the American energy industry is there. Some 80% of Gulf oil production has been shut in, and the storm could be reaching winds of 241 kilometers an hour. That's 150 miles per hour, which is just 7 miles per hour short of the most powerful storm category possible, matching the previous record breaker all the way back in 1856. We'll keep a close eye on that. Here are some of the other stories we're watching out for you. Bloomberg First Word News, now with Laura Wright. Laura.
Thanks, Yusuf. A 17-year-old was arrested yesterday after 2 people were fatally shot in Kenosha, Wisconsin. It came during violent clashes between protesters, armed counter-protesters, and the police. It's a 4th night of unrest, days after another black man, Jacob Blake, was shot 7 times in the back by police. The nearby city of Minneapolis has also declared an emergency. The White House is defending a shift in guidance from the CDC. It says people who came in close contact but don't have symptoms may not need tests. But that has alarmed many public health experts who say it could limit how many tests are performed. New York Governor Andrew Cuomo says the move is political propaganda, but the White House denies the change was influenced by them. Tensions over the South China Sea have escalated. Beijing fired 4 missiles into the waters yesterday. Sources tell us it was part of a broader military exercise by the People's Liberation Army. Around the same time, the Trump administration brought in new sanctions against Chinese companies that helped set up outposts in the disputed area. European Union Trade Chief Phil Hogan has stepped down after growing criticism he broke virus regulations. He attended a golf dinner in his native Ireland last week, an event that is now under police investigation. The EU will have to move quickly to fill the post. It has a key role in trade discussions with the US, UK, and others. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Yusuf.
Thank you very much for that. Now, turning to the 3rd night of the RNC, Mike Pence took to the stage to accept his vice presidential nomination. Raising the stakes in the election, Pence cast the win of the Democratic presidential nominee Joe Biden as the end of America. Pence also defended President Trump's record on the economy and combating the coronavirus outbreak. But overshadowing Pence's speech are far more dramatic events unfolding in the U.S. that includes Hurricane Laura, the arrest of a teenager for the fatal shooting of a protester in Wisconsin, and U.S. athletes from the NBA and the WNBA refusing to play in solidarity with demonstrators. Let's talk about what all of this means for markets. Joining us is Mark Haefele. He's the UBS Wealth Management Global CIO. Mark, just put this all together for me as we count down to the U.S. elections. Have you made any changes in terms of your recommendations?
Well, putting that all together is that's a real dog's breakfast, and I'm not sure we can do that. But I think we can talk about what to focus on, and I think the focus should be on the work that the Federal Reserve has done to convince markets they are going to provide stability and support. And so, as we look towards the fall, I think this Jackson Hole meeting is important because we think it's going to confirm that support is there, and therefore we could see equities continuing to do well. But really, the next leg has to be a widening out of the equities that are performing. as we get some of this economic recovery from the COVID situation.
So what are we going to get from the Fed? I mean, the expectation is by some analysts that we might see rates held at zero for about 5 years. There's anticipation that we get signaling around what they will do with the framework review and the inflation target. Is the market hoping for too much here from the Fed over the coming days, especially?
In some ways, yes. In some ways, no. I mean, I think that if the market expects that the Fed is going to say, mark your calendars, in 5 years is the first time that when we're going to raise rates, that's not going to happen. And Chairman Powell did an excellent job in June when he told markets that we're not even thinking about raising rates, and that they have taken the Fed at its word there. So I think that really what they have to do is just continue that message, and certainly we've seen Fed presidents along that line, which is that they don't see forces right now which are driving them towards raising rates. They've talked about deflation as a potential risk here, and therefore willingness perhaps to have that 2% inflation target be more of an average target than a ceiling. And so I think that's what people are going to be looking for.
Mark, I look at some of the volatility gauges, and there are a few red flags that we need to talk about, starting off with the NASDAQ volatility, because that's gone up together with the sharp price rises we've seen in the index itself. So we have this on the GTV for our clients. You can get the additional perspective. The last time this happened, well, that was in 2018, and after that we had quite the crash. Is that something to be worried about, given how sharp a rally to the upside we've had?
Well, I think that focusing on equity vol in one particular index is probably not the best way to think about a market that has seen such tremendous changes, both in terms of the way that central bank policy has changed, and also fiscal stimulus has changed so much. And I think if you look at the VIX has fallen demonstrably. So what I think we're a little bit more, post the worst of COVID, I think we're a little bit more back in the regime where the central bank action is suppressing volatility. Obviously, the run in the NASDAQ has led a lot of people to seek protection around what could potentially happen there, and it is so anomalous. But I don't think that the NASDAQ alone is the way to look at what's going to happen going forward for equity markets, where I think it's going to be based much more on what is going with fiscal monetary policy and the continued recovery from the COVID situation.
We've seen China fire some ballistic missiles as part of a military exercise in the South China Sea, and it's really ratcheted up the tensions between the U.S. and China just when we began to think that they were trying to reconcile everything on the trade front. Is that a stronger case for you to get into gold in your portfolios?
Well, the main driver for gold has been the large fall in real interest rates. And, I think that gold is kind of near our targets, but for a lot of our clients, it is exactly those kind of unquantifiable geopolitical risks which make them look to alternative assets, including gold. But I think that the China policy is on two tracks. On the one hand, what used to be more acute, which was concerns about the trade dispute and tariffs, that has seemingly kind of calmed down a bit, while the ongoing tensions around the South China Sea and other of these longer term concerns, those are likely to continue, hopefully in a contained way, as both the Republicans and the Democrats are trying to establish what their foreign policy will look like into the future. As we know, the American public has, in some degrees, over the past several years, developed a little bit more of a negative view on China.
Yeah. Mark, great catching up. I really appreciate your views there. That's Mark Haefele. He is, of course, the UBS Wealth Management Global CIO. Well, still to come, we're going to get to Hurricane Laura again as it makes landfall. The Category 4 hurricane hits Cameron, Louisiana, causing extreme winds and flash flooding in the state. We'll have all the details next. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gamenedine in Dubai. Let's get you then the Bloomberg Business Flash stories again with Laura Wright. Laura.
Thanks, Yusuf. The US has accused HSBC of aiding the Chinese government's clampdown on Hong Kong. Secretary of State Michael Pompeo says the lender continues to provide services to people sanctioned by the US. He also cited reports that had blocked executives of Next Media from accessing their accounts after the arrest of founder Jimmy Lai. No comment from HSBC. 3 of the world's richest people have just achieved staggering new levels of wealth. Amazon founder Jeff Bezos has topped $200 billion as shares of the e-commerce giant climbed to a record. That surge pushed ex-wife Mackenzie Scott to the brink of becoming the world's richest woman. A rally in Tesla shares has also pushed Elon Musk's wealth above $100 billion. And that's the Bloomberg Business Flash. Yusuf.
Thank you very much. Let's get to the latest around Hurricane Laura. The devastating storm could inflict more than $15 billion in insured losses. According to the National Hurricane Center, Laura came ashore near the town of Cameron in Louisiana at 7 a.m. London time. Maximum winds of 150 miles per hour. The storm's intensity matched a record set in 1856. Crude in New York is currently near a 5-month high as the market braces for disruptions to production and to refining as well. Well, let's speak to the Bloomberg oil strategist, Julian Lee. Julian, I mean, you look at the oil infrastructure that is in place in that area, and the question becomes, what is the most vulnerable link in this chain?
Well, absolutely. I mean, if you look at the path of this hurricane, I think the one very small comfort you can take from it is that it's making landfall between Houston and New Orleans rather than over the top of one of those major cities. But it is coming ashore in an area of the Gulf Coast that is thick with refineries, ethylene crackers, liquefied natural gas export terminals, and two out of the 4 sites for the Strategic Petroleum Reserve, and not to forget all the production offshore in the Gulf of Mexico. We've had more than 1.5 million barrels a day of Gulf of Mexico production shut in for 3 days now, but that will start to come back. It's possible, I think, that the more significant longer-term damage could be to these refineries and ethylene crackers and the onshore infrastructure from massive storm surges that are being predicted.
We're looking at, again, live images coming through from Galveston. In terms of the road forward and, in terms of what else can be expected from the damages, just run me through what else you'd be looking at specifically.
Well, I think specifically we would be concerned about both wind damage and water damage to refineries, particularly in the Lake Charles area, perhaps as far west as Port Arthur. They seem to be very much in the path of the eye of this storm. We're hearing suggestions that storm surges could move as far as 30 to 40 miles inland, with water rising perhaps as much as 20 feet. The problem is that very often it takes a long time for that water to recede, and that means that the damage to refineries in particular can take many weeks to recover from. And that, I think, is likely to be perhaps a bigger impact than any disruption that we see to oil production, which would probably come back more quickly.
Julian, thank you for that. That's Bloomberg's oil strategist, Julian Lee, with some additional perspective. Coming up, just months after the taking of the helm at the short video app company, Kevin Mayer stepping down as chief executive. We'll have the details on new trouble at TikTok. This is Bloomberg. watching Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Let's get you back to some of the markets because we have a situation where we're reaching stall speed, a moment to reflect for a lot of these key metrics. Your stocks, Europe 600, we are down 0.3%, really weighed down by Rolls-Royce. U.S. equity futures are lower as well. We're counting down to the speech of Jerome Powell, highly anticipated at Jackson Hole. What are we going to get? Is the market going to be surprised by some portion of it? That we will find out. U.S. 10s at 68 basis points. We have a 7-year auction later on today. Euro-dollar 118.32, pretty much unchanged. The whole FX complex, quite contained the moves. And then WTI as we keep a close eye on Hurricane Laura.
Now I am placing a stop on profit at 106.016. Everything comes to him who waits, yeah? Okay. Actually, I will move soon, probably, to 106.26. Okay. $106.026.
Being in the middle of a sort of geographic conflict with political relationship with China at stake, and that role is not something that he was ready for, it doesn't seem, or indeed wanted to take on.
And then where does that leave the embattled company? I mean, this is really the least convenient moment in terms of senior executive changes.
It is a huge blow. Like, it was a massive coup to get Kevin Mayer when they hired him. He was, many thought, the heir in waiting at Disney. They thought that he was going to be the next CEO. He ended up losing out to Bob Chapek. But, he's the guy behind the Lucasfilm deals, Pixar. He built Disney Plus. So many impressive things on his CV. Therefore, it really ticks off a huge amount of credibility. Therefore, by the same token, his departure is a huge blow to the company's credibility and its efforts to be seen as a genuine global company with a real U.S. business rather than some sort of extension of Chinese soft or indeed hard power.
Oh, we're going to have to leave it there. Alex, thank you for that. That's Bloomberg opinion columnist Alex Webb. Some breaking lines hitting the Bloomberg from Japan. Shinzo Abe, the prime minister, is set to serve out his term as the LDP leader. That's according to a top aide. There's been a lot of speculation about the prime minister's health. In the run-up to this, he has made several visits to the hospital. And now a confirmation from a top aide that there is no...
Moving to 106.096.
But we are above 106 again. All right, still to come. We're going to dig deeper into the story out of Jackson Hole, potentially. The Fed Chair Jay Powell is top billing as central bank is going to be gathering there, virtually, of course. We'll discuss that. This is Bloomberg.
And I closed my position on Japanese yen at 106.096. Profit 1,000 pounds. How long it took us to make a profit, as you can see, it was where we started. It was 8:34. What time is it right now? 9:28. We had a better days, yeah? Okay, guys. Everybody who followed this trade, well done. You did well. Anybody who's still cautious, you can get our strategy. On Tika, you can see the strategy where you can get it from. And you can make basically the same amount of money, okay?
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gemeluddin in Dubai. Let's get to the Bloomberg First Word News again. Cross back out to Laura Wright. Laura.
Thanks, Yusuf. Hurricane Laura made landfall earlier this morning in Louisiana, one of the most powerful storms to ever strike the state. It's threatening the region with catastrophic storm surges, flash floods, and devastating winds. The storm has shattered more than 80% of Gulf oil production. Professional athletes boycotted games last night to protest inaction on racial justice. The move was sparked by the police shooting of Jacob Blake. It started in basketball but has since spread to baseball and soccer. The boycott had an immediate impact on broadcasters and sports companies. China says it offered to let US regulators audit some sensitive mainland companies. It's hoping to diffuse a spat that could see some of its firms on American exchanges delisted. The vice chairman of the Chinese regulator says Beijing is sincere in wanting to solve the standoff and that business links benefit both sides.
For all the U.S. investors who have invested in these Chinese companies, they have made a lot more money than the average market return. And it's good for the Chinese companies as well because they have the access, right, to international capital, and listing in New York also helps raise the corporate governance standards of these companies as well. So it's mutually beneficial. So I hope there will not be a decoupling.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Yusuf.
Thank you very much for that. Now, having gone to unprecedented lengths to combat the COVID crisis, monetary policymakers are kicking off a virtual Jackson Hole conference. Federal Reserve Chair Jerome Powell is scheduled to speak today, and that's going to be on the long-awaited Fed Framework Review. Let's look back at what the policymakers were saying this time last year.
I think we have to act as appropriate when we see the economy having a shock. I don't see that right now, so I don't think we need to act right now.
As I look at where the economy is, it's not yet time. I'm not ready to begin to provide more accommodation to the economy without seeing an outlook that suggests the economy's getting weaker here.
You see the data coming in pretty solidly. Consumers are confident, consumer spending is solid. Business investment is slowing, weighed down by uncertainty, of course, but it's not negative, it's not disinvesting. We still have growth.
The fulcrum or the center of gravity in U.S. economic policy today is not monetary policy. It's trade uncertainty. It's probably immigration policy to some extent.
There's a reason to think that interest rates are going to be lower going forward than they were in the past.
Well, that was already a year ago. Incredible. Different world. Well, let's discuss more with Simon Kennedy from Bloomberg Economics. Simon, in terms of the big message, again, it's hard to talk about the policy review without giving away too much, because the sort of official announcement and unveiling is slated for later on in September. How are they going to manage that?
Yes, that's true. So I think Jackson Hole has a history of kind of front-running major announcements, and so I think Jerome Powell will be able to give some details of where they're at.
And what exactly would that comprise? Is that going to include inflation targeting and sort of allowing to go past the 2% limit, not taking too much of an issue with that?
Yes, this is an informal target that they currently have. It's about 2%. They've formalized it more than it once was, and 2% is generally the marker for most international central banks. The debate now, and the one that the Fed seems likely to land on, is what happens in periods of crisis, as we've seen, or recession. Do you have to kind of give a little backer later on? Do you have to let inflation breach the 2% over time to kind of make up for when it undershot it?
I mean, what caught my eye was a Bloomberg editorial that was written about what the Fed could do, and then they're saying that you should be looking at trying to express goals in terms of nominal GDP. So in terms of growth in demand, rather than obsessing over an inflation goal just because you committed to it in an earlier part of last year or years prior. What about some other highlights from the speakers at Jackson Hole? What are we going to get?
So we're getting a kind of the greatest tour around the world, really. We've got Philip Lane of the European Central Bank. He's the chief economist there. We've got Governor Andrew Bailey, the new head of the Bank of England, speaking. Representative of Singapore is also going to be there. So there's a good chance for central bank watchers to get an insight into what the major central banks are all thinking as they return from the summer.
Simon, thank you for that. That's Simon Kennedy from Bloomberg Economics. Always a pleasure catching up. Well, let's stick with Jackson Hole, because we also spoke with the Federal Reserve Bank of Kansas City President Esther George ahead of the symposium. Here's what she had to say.
Depending on how the economy unfolds, watching to see how job markets recover is going to be a very important component of this. So in the months ahead, I think watching the data, watching to see what sectors respond, and I think most important, we really are focused on saying, what is the end game for this virus? Until we know that, that is really fundamental to how the economy unfolds. And so beyond that is really just speculating and thinking about various scenarios that could affect our outlook.
One more on inflation, and that is the idea that all the stimulus the Fed has put into the financial markets is contributing to asset price inflation. Do you have any worries that a bubble might be forming?
So I think, you know, Mike, one of the things that I have long paid attention to is financial stability and being concerned about whether imbalances could be building. And that is the nature of monetary policy stimulus. It lowers the cost of borrowing. It can create incentives for reaching for yield. And of course, today, the focus is different. But I think as we watch how this unfolds, it remains as important as ever to keep an eye on what the financial stability state of affairs is for our economy.
Investor Leon Cooperman notes the national debt is rising faster than growth, and that will cause problems for the economy down the road. Do you agree with that?
So I think when we look at what role fiscal policy has played in this, it's played an important role. Monetary policy, fiscal policy to this point has been quick. It has been aggressive, and I think the outcomes that we're observing shows that households have benefited from that, and so have businesses to a great degree. So thinking ahead to preserving the ability of the economy to be able to come back online, I think has to be the focus. The consequences down the road are ones that policymakers will have to face eventually. And for now, I'm going to stay focused on the part I play with monetary policy.
People in different parts of the country have suggested that the rise of the virus again during the summer months and the end of that $600 stimulus put the economy on something of a holding pattern. Has that been your experience in the 10th District?
So I think as we've watched this summer, it is becoming clearer that the path of the virus certainly affects the path of the economy. And we see that where economies have opened up only to experience some kind of resurgence in the virus, they've had to pull back. And of course, individuals can pull back and businesses as a result of that. So it's very clear that the foundation to a solid recovery is going to depend on addressing the virus first, and then of course, monetary policy as one of the supports to the economy going forward.
Never say anything like that. Before I let you go, let me ask you about the Fed's lending programs, because for many of them, there hasn't been a whole lot of take-up. Have people in your district been able to get the money they need, or is it a question of they just don't want it at this point?
So I think you're referring to the Main Street credit facility, which would be one used in this region where you have small businesses, small banks. And that, I think, is going to be an important credit facility going forward. And I'll tell you why. First of all, it came online just last month. We are seeing a number of lenders register for that program and begin to extend credit under that program. So when you think about the pressures that small business may be under in the months ahead, I think this could prove to be one of the options that they turn to. Community banks are very focused on how they're going to support small businesses and other customers in their portfolio. And with that kind of backstop, we may see that its usage begins to rise.
How about the municipal lending facility?
So I think in some of those other facilities, so municipal, the corporate bond facilities, the fact that those are broader markets where pricing takes place, I think the effect has by and large been the fact that the Fed has that facility as a backstop, has ended up influencing the pricing for those. And so in some respects, it's done its job in an indirect way by making financing conditions easier without actually making the extension of credit. But again, as we see how the economy unfolds, those facilities too may have a different level of take-up in the months ahead.
That was the Kansas City Fed President Esther George speaking earlier. And don't miss our interview this afternoon with the St. Louis Fed President James Bullard. Plenty more ahead. This is Bloomberg. watching Bloomberg Surveillance. I'm Yusuf Gamaduddin in Dubai. Let's get you the Bloomberg Business Flash again with Laura Wright. Laura.
Thanks, Yusuf. Jet engine maker Rolls-Royce has suffered a record half-year loss. The British company posted a pre-tax loss of $7 billion after the coronavirus grounded jets across the world. Rolls-Royce plans asset sales to help weather the downturn. CEO Warren East says 4,000 jobs have been cut so far. A total of 9,000 may end up being eliminated. Salesforce is moving to streamline its business. Sources tell Bloomberg it plans to cut about 1,000 jobs, including sales and customer support roles. It comes as the software company reported record quarterly revenue and forecast further gains. Salesforce says it's reallocating resources to position for continued growth. London's Gatwick Airport is planning a restructuring that could see the loss of another 600 jobs. That's nearly a quarter of the remaining workforce. It comes after some of its biggest customers abandoned operations there. It has already scrapped nearly 800 posts through voluntary exits and the halting of short-term contracts. That's the Bloomberg Business Flash. Yusuf.
Thank you very much. Quick newsline coming through from PetroChina. That is, of course, one of the heavyweights listed in Hong Kong. So they're coming through with a first-half IFRS loss of close to 30 billion yuan, and that compares to a profit of 28.42 billion yuan in the same period a year earlier. The company operates, of course, apart from oil and gas services, everything from exploration to development and production and marketing. So 500,000 people work for PetroChina. Year to date, the stock has been under pressure because of the lower oil prices, about 30%. We'll keep a close eye on that, but now let's talk about some other important stories, including a white 17-year-old boy who's being held after 2 people were shot to death during violent protests in Kenosha, Wisconsin. Demonstrators were protesting the police shooting of a black man. The teenager was arrested in Illinois, about 15 miles from where the shooting took place. Meanwhile, more National Guard troops were sent to Kenosha, and a curfew was imposed as well. Protesters have so far ignored it. Let's get also to the angle around professional athletes, because they've boycotted games last night to protest inaction on racial justice. The move was sparked by the police shooting of Jacob Blake. It started in basketball, but has since spread to baseball and soccer as well. And the boycott had an immediate impact on broadcasters and sports companies. Joining us now for more is Derek Wallbank. Derek, I mean, in terms of the world of sports and the reaction, how likely is it that we're going to see more take part in this?
Well, I think one of the most notable things in answering that question came just within the hour when Dwayne "The Rock" Johnson, the biggest movie star on the planet, who also fronts one of Under Armour's most prominent brands, said they were going to be delaying the launch of a shoe that was supposed to be coming out of respect for Jacob Blake and his family. And so this is an idea that's spreading. There is a very big feeling among a lot of people, certainly in the NBA and elsewhere, that there has been a lot of attention on racial justice issues since George Floyd was killed earlier this year in Minneapolis by police. And they don't feel like they've had the results that they wanted to see, and now they feel like they need to do more. It's unknown how the NBA is going to proceed from here. League officials are going to meet later today, this morning, USA time. Major League Baseball has signaled it's going to come back. They've rescheduled some of the games that were postponed. But it's clear that this is an escalation from where we were even earlier this year.
Derek, you've been keeping a close eye on the protests. What is the latest there?
Well, there were protests again last night in Kenosha, Wisconsin, which is a city on the shores of Lake Michigan, a little bit south of Milwaukee. There were also protests in a bunch of other cities. The one I would draw your attention to is where Floyd died in Minneapolis. The National Guard was called up again to deal with unrest there. There was an incident where there was some misinformation going around about a shooting downtown, widespread looting, business windows smashed up downtown. The governor of that state calling for calm. In Wisconsin, more reinforcements for local police
coming there last night. And amid all of this, there's also some questions that are being raised about the policing that was done in Wisconsin, namely why the person who was arrested for shooting two protesters fatally, I should say, was allowed to leave the city and cross state lines. There are a lot of questions that are here in terms of the response, and it's fueling that doubt that I mentioned earlier, which is fueling that additional urgency.
Derek, thank you very much for that. Derek Wallbank there. Some more lines coming through from Hurricane Laura. So a catastrophic storm surge, and extreme winds, and flash flooding continue. So that is just coming across now. The hurricane is moving northward over southwestern Louisiana. It's going to the National Hurricane Center. We're looking at live images this moment from Galveston, Texas. Bear in mind that we're looking at speeds of up to 240 kilometers an hour. That's 150 miles an hour. The last time around we saw speeds like that in that area was with the Lost Island hurricane of 1856. Much of the U.S. refining capacity is centered in that region. A lot of the key ports, not just Galveston, but also Freeport and Houston, are closed, and some $15 billion in insured losses could ensue, according to Bloomberg Intelligence. In the meantime, here's a snapshot of what else is coming up. Our interview with Louis Vuitton's first black artistic director. We'll be hearing how Virgil Abloh is raising black voices in the fashion world. That's next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
A lot of it is how I approach my advocacy. You know, I found that, you know, me being one of the few Black designers at the head of a Parisian fashion house gives me a unique opportunity to sort of lead in that space. You know, I've started my postmodern scholarship fund, which works at the education level to make sure that there's inroads kept for young Black designers to work in the fashion space. all the way to my show in Shanghai was largely created by an all-Black creative team, just to showcase the state of the art and how diversity and inclusivity can lead to great results.
Your website also talks about how your advocacy looks different. What does that actually look like? Walk us through that.
Yeah, indeed. You know, part of my advocacy is fundraising, you know, putting dollars where it matters to sort of make sure students are entering the road to having a career in design, fashion, creativity. But that's not all that it encompasses. You know, a lot of that is leading by example. You know, I'm the head of a house, so how I build my collections, how I represent Black culture, how I represent Black DNA is important, you know. And then as well, you know, I'm supremely focused on mentorship. You know, I think that there's a critical point in everyone's career in order to sort of receive the right advice, to sort of work in the right position. And all those sort of different spheres are important to how I approach my advocacy.
Talking about looking internally, especially big corporations are thinking, or, you know, we asked them on Bloomberg Television, you know, is it time to start implementing metrics? Do you think a system like metrics would work for diversity?
For this system to change, to eradicate systemic racism, all tools need to be used. You know, I think that we want to see this at the grassroots level, all the way to the level that the consumer can feel it, to show that we're committed to it. So for me, on my hand, I advocate all tools to sort of root out systemic racism.
Has your leadership changed?
I think my leadership has changed. You know, I would agree with that statement of me being one of the foremost figures in design, as well as being a Black male. There's a unique opportunity for me to seize, to be a leading voice, to sort of lead by example. My postmodern scholarship fund was announced as my wide sweeping effort to tackle that and to also roll up my sleeves and showcase the work that I've believed in since I started. So, you know, I welcome the challenge and I'm taking it to heart.
Virgil, you've collaborated with, I mean, the list is
pretty
just ongoing. Yeah, Nike, Evian, IKEA. Then you have the personalities, Kanye West, Serena Williams. You've showed at art institutes in Chicago, in Atlanta. You DJ. I don't know when you find the time for it, but you also DJ. With a resume like that, what is next for Virgil Abloh?
You know what's next for me is eradicating systemic racism and showing how, like, inclusivity and a positive mind can be the forefront of creative business. You know,
that was
I think if I look at a
the
bird's eye
artistic
view of
director there of Louis Vuitton menswear, speaking earlier. We are getting some more news from Hurricane Laura, and we understand from the National Hurricane Center that it's actually weakened to a Category 3. Originally, it was a Category 4. So an official line from the NHC that the storm has weakened just a little bit as it made landfall. Winds, I mean, just short of some of the records that we've seen in the past. U.S. equity futures pausing for reflection, and plenty more ahead. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning at Jackson Hole, Chairman Powell will, quote, bestow gifts on the market. That, according to James Karen at Morgan Stanley. Karen looks for a weaker dollar. Our Michael McKee will not be having his game day Mountain Man breakfast at the acclaimed Pioneer Grill. Is this Jackson Hole? It's a virtual Jackson Hole. The present danger of Hurricane Laura, landfall winds the most grievous since 1851. And you won't be safe in Joe Biden's America, so says Vice President Pence. Meanwhile, the former football coach of Notre Dame says Mr. Biden is, quote, Catholic in name only. Good morning, everyone. This is Bloomberg Surveillance. Tom Keene in New York. Anna Edwards, day after day after day, in for Francine Lacroix in London. Anna, we really appreciate your longer day here at Bloomberg Surveillance. What do you see in Europe today? The blur here of Merkel and stimulus in Germany. What gets your attention this morning?
Yeah, stimulus in Germany, part of it. We've been actually watching what's been going on the Louisiana coast with the latest headlines on Hurricane Laura. That has preoccupied people. And here in Europe, also waiting for other developments stateside when it comes to Jackson Hole. We will, of course, talk about both of those things as we go through the program, just as we see Laura weakening to a Category 3 hurricane, although we know that they can still linger and they can still do damage.
About 120 miles an hour maximum wind, but the landfall of 150 was extraordinary. The shape of the storm has changed dramatically as well. Rob Carolyn to join us in the next hour. Brian Sullivan, we hope to have with us here in a number of minutes. With our first word news in New York, here's Ritika Gupta.
Morning, Tom. Anna, it's one of the most powerful storms ever to hit Louisiana that you were just discussing. Hurricane Laura made landfall early today near Cameron, Louisiana, with maximum winds of 150 miles an hour. Plus, there's the threat of a catastrophic storm surge and flash flooding. There's concern that damage could leave areas uninhabitable for months. The hurricane forced the shutdown of more than 80% of the Gulf's oil production and a third of the region's refining capacity. Winds have died down slightly, but Laura is still a Category 3 storm. Mike Pence accepted the Republican Party's nomination to be President Trump's running mate again on the third night of the convention. Pence praised the president and blasted Joe Biden.
Where we fought for free and fair trade, and this president stood up to China and ended the era of economic surrender, Joe Biden has been a cheerleader for communist China. He wants to repeal all the tariffs that are leveling the playing field for American workers. And he actually criticized President Trump for suspending all travel to China at the outset of this pandemic.
Pence spoke from historic Fort McHenry in Baltimore. A white 17-year-old police admirer is being held after two people were shot to death during violent protests in Kenosha, Wisconsin. Demonstrators were protesting the police shooting of a black man. The teenager was arrested in Illinois, about 15 miles from where the shooting took place. Meanwhile, more National Guard troops were sent to Kenosha and a curfew was imposed. Protesters ignored it. And the National Basketball Association started a boycott over police shootings. Now it has spread to baseball, soccer, and women's basketball. That led to a number of games being cancelled. The NBA protest could lead to the playoffs being scrapped. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Anna, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. I'm going to give you one data point this morning and again walk through this. Steve Major at HSBC out with a superb residual note. The nominal yield was higher yesterday, up to a 0.70, 0.71. It is lower today. Inflation expectations continue to advance gradually, and what that means, you take one, you take away the inflation expectations, you come back to a new lower real yield, and it is much lower than yesterday in the Chairman Powell's speech, negative 1.0548. That's not a record low, but getting there rapidly. That's certainly a turn to a larger negative real yield, Anna, in the last 48 hours.
Yeah, absolutely. Quick check of my data then, and we've got here waiting for Powell, as you suggest, then, Tom, on European equity markets, entering into a little bit of a downdraft, but down just 0.3%. The London market underperforms a little bit, although, no, having said that, the CAC 40 down 0.6%. We've got, in London, one high-profile stock for you. It's not huge anymore, Rolls-Royce, the engine maker. It is iconic, and we had a huge loss from Rolls-Royce. That is weighing on their share price. Also talking about selling assets and even the possibility of raising equity. That is being reviewed, they say. Power by the hour means they get paid for every hour that engines fly, and when they don't fly much, they don't get paid so much. Let's get to geopolitics, though, Tom, and European politics. European Commission President Ursula von der Leyen giving a statement on Phil Hogan's resignation as European Union trade chief. Remember, he resigned just in the last 24 hours, and we're hearing from Ursula von der Leyen that Dombrovskis, that is Valdis Dombrovskis, who has the finance beat, he's going to be taking over the trade role temporarily. It is a very busy slate of activities for any trade commissioner for Europe. Let's get into a conversation then on that with Richard Lacaille, State Street Global Investors, Global Advisors, Global CIO, is with us. And Richard, I want to start with the resignation of Phil Hogan, and not to dwell on him personally, but just to think about the amount of workload that faces the person who comes in here. We've got a trade deal to strike with the United States, if that's possible. We've got the Brexit trade negotiations still ongoing. Plenty for the new incumbent to deal with. Richard Lacaille does not seem as if he can hear me, but plenty for, as we were saying, Tom, plenty for the incumbent, for the new trade commissioner to deal with. That tenseness in the relationship across the Atlantic, just part of the story.
Yeah, this is a soap opera, folks. For those not up to speed, and that would include me here in America, Mr. Hogan is widely respected in Ireland, and he went to a golfing tournament, and it broke pandemic groups of people rules, and he was, I guess he resigned, but under a lot of pressure. And now Ms. van der Leyen is coming under some real, not criticism, but some real angst about should domestic politics play into positioning at the federal level of the European Union.
Well, it's really interesting, the circumstances that have forced him to resign here. It was controversial from the start. He went to this event that he thought had been given clearance to take place. It was to some extent a government, an Irish government event, but it is now being investigated by the police. He said he had a test, and therefore he was allowed to break with the quarantine rules that applied in Ireland at the time. The letter of the law says that's not the case. So all of this was very controversial. He fought back for quite a while. He apologized, but he then fought back in some domestic TV interviews, and that didn't seem to go in his favor at all. A lot of political pressure domestically, and finally he has fallen, and it seems that Ursula von der Leyen has to find a replacement. Even if she has one in the short term, she'll need a full-time one, of course, to take on all of those duties. Tom, later today on Balance of Power, we're going to be speaking to Wilbur Ross, U.S. Commerce Secretary. Perhaps he'll have some thoughts on who the U.S. deals with on trade on the other side of the Atlantic. That interview is at 12 p.m. in New York, 5 p.m. in London. More on Hurricane Laura and plenty more looking ahead to Jackson Hole here on Surveillance. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I've never thought of 2% as a ceiling, but to really stay focused on what anchors inflation expectations in the economy. So from a communication standpoint, I think we will be talking about the kinds of things that help us do a better job of achieving our objectives. I think trying to gauge what else does the economy need is probably premature. I think we are beginning to see signs of a recovery. We're beginning to see where the economy may have shortfalls, where it may be doing okay, but that is going to take some time. So thinking about what those other things are, I think has been a useful discussion. Whether it's time to activate those things is something we'll be debating.
Kansas City Fed President Esther George speaking to Bloomberg ahead of her bank's annual Jackson Hole Symposium without the usual stunning backdrop of those Jackson Hole Mountains. But no doubt the content will still be compelling. Let's get to Richard Lacaille now, State Street Global Advisors Global CIO, who's with us. Richard, we were just hearing there about the recovery in the U.S. economy. Where have we got to in that recovery? Does it have momentum, do you think?
Well, we're past the first very rapid stage, and now we're at a kind of a shallower slope, shall we say. But the slope's still continuing to be upward. I think we've seen some good data recently from durable goods. Consumer credit card data looks like it's continuing to have momentum, but it's slowing. And I think it'll continue into the end of the year at this pace.
And what kind of assessment do you think we'll get from the Fed then, from Jay Powell when he speaks later on today? A real focus on the way they're going to change the inflation targeting for the central bank. Is that going to be the focus for you? Are you looking for new words around average inflation targeting?
Well, I think in normal times we'd be really interested in their kind of longer term perspective. Will they raise the inflation target or soften the ceiling, so to speak? But right now we're focused on what can be done today. And I think we need reassurance that they're still going to be fighting deflation and considering other policy tools next year. I think they won't want too much drama out of that rejig of policy statement because they won't want to upset markets too much. And frankly, in the short term, the policy levers available are somewhat limited.
Rick Lacaille, good morning. Tom Keeney in New York. How do you define a bubble? I mean, there's a whole group out there saying that this has bubble characteristics. What's the physics of a Rick Lacaille bubble?
Well, everyone looks for bubbles, and I think it's a smart thing to do to look for bubbles, but they're awfully hard to spot in advance. I think right now you've got a very strong story around technology companies. There's a real sort of nifty-50 sense that there's a real economic story, but everything can get overvalued, and we're getting close to that level now with some of those companies being overvalued. But we shouldn't forget that real technology and economic story can spread a little bit more widely and go on for much longer than people think.
Well, it could go on for much longer than people think. I mean, that's the timeline here. The x-axis is well. Peter Hooper was with us yesterday, Rick Lacaille, the wonderful chief economist at Deutsche Bank, and he said, look, no vaccine, no stimulus, recession, Q4 and into Q1 as well. I guess like 1981, a double-dip recession. What do equities do given a Hooper scenario?
Well, double-dip recession would definitely see, earnings revisions would drive the market down very sharply. It's only really the discount rate and loose policy that's holding the ship up. I think you will see a spike up in volatility in the fourth quarter, because that's the other puzzle. Actual volatility has been very low because correlation between stocks has been dropping quite a lot. But if you look at implied volatility, people are still a little bit cautious. So I think in the fourth quarter you'll have a catch-up where realized volatility will rise to match implied.
And Rick, what are your expectations on fiscal spending, given what you said there? You talked there about the monetary stimulus being important, and of course it is. But what about fiscal? If we did see a double-dip recession, if we do see the politics turning out to give us a change or no change, what kind of fiscal largesse will we see from the US government?
I think if you had a double dip, and again, a double dip would be preceded by signals of a double dip, I think you'd have to have and you would see much more multilateral, multinational action, more coordinated policy. I know it goes against the grain and we haven't seen that for a while, but I think that will be essential and seen as essential. And I think that would put us into a softening of that double dip and an improvement into 21.
And is that regardless of who wins in November then, Rich?
It is regardless, because I think the compulsion to act and to use those levers, particularly fiscal levers, and to reduce trade tensions would be paramount. It would not be solved by a sort of single nation strategy. And I believe that regardless of who would win the election.
Rick, I look at the election, and I grew up in a house where it was pretty much ignored. Do you ignore the punditry about the election as you look out 6 months, and particularly as you look out 18 months?
I don't. Well, punditry may be one thing. We certainly are interested in policy because we're long-term investors, and the health of our portfolios is affected by those policy choices. So I think we're looking for policy choices that will be favorable to long-term economic growth and welfare, not just in the US, but elsewhere. And so I think punditry has not been helpful in kind of pointing out what those important policy differences are on trade, on taxation, and on, in a sense, supporting things like infrastructure. They've been sparse and they've focused on more of the emotional issues.
Well, we've got the emotional issues of the stimulus now, but that's not the kind of stimulus you're talking about, is it?
Well, I think fiscal stimulus is important, but how the fiscal stimulus pans out. I mean, listen, on both sides, and it's true of many nations, there isn't much opposition to loose fiscal policy, either from bondholders or politically. I think that will be the case in this election. But how do you spend the money? It's the important thing. And the sense that infrastructure spending, rather than necessarily some more tax cuts, is probably the way to go.
Rick Lakai with us. We'll look into some sector analysis here as well with State Street Global Advisors. What we're going to do here, folks, with the seriousness of this hurricane, of course, the Powell speech at 9:10 a.m. Eastern time, we're going to come back and do a Hurricane Act with Brian Sullivan. He is really, really good at the commercial aspects of any given natural disaster. And then we'll come back with Mr. Lakai to give you more wisdom on economics, finance, and investment. Anna Edwards in London. I'm Tom Keene in New York Futures in -9. This is Bloomberg. Stay with us.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. Good morning, everyone. Anna Edwards in London, Tom Key, New York. This is a Thursday of major stories. Jerome Powell, 9:10 a.m. Our Michael McKee will be with us through the morning as well. An exceptionally important speech. Jim Caron at Morgan Stanley says simply, this is going to be a speech that will move markets and provide gifts to the market as well. Right now, we have a gift at Bloomberg. He's Brian Sullivan, who's put together a career at Bloomberg of the commercial impact of natural disasters. Brian, it is a normal refinery process to take the salt out of oil. They do this with a fancy hydrolysis process. I get it. The salt from the salt water of Laura is a different process, isn't it?
It's a total disaster, Tom, is what it is. I mean, it will get into all their electrical equipment and just destroy it. That's the main problem, is that now you're going to have to rebuild a lot of the infrastructure that just runs a refinery if the salt water got into these refineries. And we're talking about 10% of the U.S. capacity, refining capacity, could be offline days, weeks, months. Here.
Is there an import or export skew to this? Is this American refined products going to the American public, or is it for the export, the burgeoning U.S. export market?
Well, you got to kind of mix here, because you've got the not too far away from where the refineries are. You have the export, the LNG export facilities, which are, need these big giant 900-foot LNG tankers to come up, park, get the LNG, and then take it out to other countries, other places in the United States. And this is also was in the path of this just wall of water that the Hurricane Center says is going to last for days. It's before it starts to recede and goes back into the Gulf of Mexico. So these facilities have been at least temporarily taken offline, and when the sun comes up, I think we're going to see whether or not the damage has been even more extensive.
Brian, good morning. So that's the wall of water. That's what we need to watch for. What about the risk of flooding caused by a storm staying in one place and just dropping a lot of rain? We saw that with Harvey, didn't we, in 2017, really flooding Houston because it just got stuck there, essentially. What do we know about the path of this and whether it's going to do something similar or move on quickly?
Laura is actually moving on quickly, and it's actually also the top winds are dying off. It's down to, 120 miles an hour. I wouldn't want to be standing in front of that. But by tomorrow, it will be down to a Category 1 hurricane, and then pretty soon into a tropical storm as it just runs up the Mississippi River, takes it right up the Ohio River, and then comes over the northeast of the United States by this weekend. So it's a fast mover. We're not going to have that Harvey effect where you had, rain by the foot for day on day.
Well, that's at least one silver lining. 1856, Brian, I think you have to go back to find a storm that hit Louisiana with such force. You mentioned earlier some of the risk around saltwater getting into refineries. How much of an assessment do we have at this point as to how long we take infrastructure out of the system for? Are we looking at something that takes a long time to clean up and then a long time to rebuild, or we just don't know yet?
We just don't know yet. You know, a lot of these areas are still being battered. The storm isn't that far inland yet. It's not too far from Lake Charles, Louisiana. It just came in at 1 o'clock in the morning, their time, local time, so about 4 hours ago. It's moving about 15 miles an hour, so it's still raking that area pretty hard.
I think, Brian, one of the great mistakes here, and this is particularly for cozy New Englanders like you and me, are the distances involved here. To Houston, 500 miles to the west. New Orleans, 300 miles to the east. Baton Rouge on the way to New Orleans as well. Describe the oil industry midway between Houston and New Orleans.
That area, first of all, it's kind of similar to Quebec. So, you know, you walk into the stores and people will greet you in French. You know, that's one of the charms of the place. But we're talking about a fairly rural area. Still hundreds of thousands of people are affected by this. I don't want to downplay that. But these oil facilities down there, I mean, they dominate the landscape. You see them from, you know, very far away. They light up the night at night. Sometimes you think you're approaching a huge city, but it's not. Well, it's a
Brian, gotta leave it there. Brian Sullivan on the commercial aspects of LoRa, now Category 3. This is Bloomberg. Good morning.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Surveillance. Good morning, everyone. Anna Edwards in London. I'm Tom Keating, New York. Some days the news just comes at you. Today, it's pre-planned. There it is, besides my bow ties, not strength. Anna, thank you for mentioning that to me. We've got the convention. We've got the Powell speech coming up here. Michael McKee all set on that. And we get fortunate, and then we have Richard Lacaille with us. He is with State Street Global Advisors. Rick Lacaille, I want to talk about something nobody's talking about because they all own Amazon and Apple, and I don't. And that is portfolio construction. How do you put together the most optimal equity portfolio right now?
Well, I think the golden rule is always to be diversified and to look pretty widely for opportunities. I think if you're an active manager, you've got to obviously stick to your style. And that's been very difficult. For those who don't own Apple, Amazon, it's been an extremely painful experience. But the lesson of history is, for example, if you're a value manager, you've got to stick to being a value manager and not get too distracted. But for most investors, the widest possible degree of diversification globally and across sectors is by far the best long-term portfolio.
Do you see the wall of money that's out there taking advantage of the, say, price to cash flow disparity of tech and a few others versus the things that are undervalued?
Well, I think there's people have been carried out by that value trade. They've wanted that to be right for a really long time. The elastic gets stretched more and more, and I think there's been a fair amount of capitulation. The last several weeks have been interesting, though, because there's been a drop in correlation between stocks, and that normally heralds a revival for active management, value-orientated management. So we may be seeing the beginnings of that, but it's really early to call that value rally yet, because the macroeconomic conditions that are providing that growth rally are still with us, lower for longer, and the scarcity of economic growth.
Yeah, Rich, if you're talking about full diversification across products, across geographies, then some may wonder whether you just then are best off going with passive investments. How do active investors really prove their mettle as we come out of this?
Well, they have to focus on what they're good at, and that's what we do. Where we're active managers, we're completely focused on one particular niche discipline, whether it's quantitative investing or value investing or growth, and not to try and do everything with one set of tools. So, I mean, that said, I think indexing has been fantastic as a value proposition for investors over a very long time. But most investors need more than just the index, and therefore they have to think, how am I going to outperform the next person? How am I going to spot that manager? And one of the ways you do so is look for people who really stuck to their guns through thick or thin, whether they're quants or value or growth.
I seem to ask a lot of people, Richard, about when value, comes back to have its day, and we've been asking it for years. And I wonder how many years into the future we will keep asking it, or will it be the case that growth just takes the prize week after week from here on? I mean, when do you see a real resurgence in value?
I think when the yield curve gets a little bit steeper, I mean, we're kind of venturing into macro territory. Yield curve gets steeper because nominal economic growth looks better. So you've got to look quite a long way forward for that set of circumstances. Doesn't mean that individual value managers can't do well, because they're going to look for bargains. And often, the private equity industry is after the same kind of bargains, undervalued businesses that can be taken private. So that puts a floor under the valuation of some businesses. But to get a true rally, you need a big change in the economic outlook.
Rick Lacaille, how is this different from January of 2001, before everything unraveled in March of 2001?
Well, we're looking back at previous eras, the dot-com bubble, but also the Nifty 50. The 2001 era was a little different because you didn't have so much in the way of real earnings power from some of these overvalued tech names, whereas now you've got a real economic story and you've got a real earnings story. So it does look a little bit more like the 60s and the Nifty 50 era than the dot-com.
Well, I'll say it's like Nifty 50. Rick, I hate to mention it, but I actually have a recollection of the Nifty 50. But we're still getting over the shock in America of, say, Salesforce.com joining the Dow. I mean, tech is taking over. We've been calling it near digital dominance. Is that what you see as a digital dominance?
Yeah, I think these phrases are unhelpful, really. If you dig in deeply, what have you got? You've got technology that's changing a number of industries, whether it's healthcare or shopping, delivery businesses like Amazon, and they're becoming much more effective and efficient businesses. And in some cases, they got monopoly-like profits. So those things are all swept together. It's not so much to do with advances in hardware as the way in which people have changed business models. And I think that will sweep much more widely. And I think it'll really revolutionize things like efficiency in the healthcare system and drive economic growth.
Or maybe, Rick, all companies are, in the end, migrating towards becoming tech companies. It's fascinating to see how tech disrupts one industry and then another, and even places you didn't think it was possible.
Yes, and I think what goes with that is the growth of intangible value. And just to raise another related point, if the business has got a lot of intangible value, you've got to be careful about things like reputational risk, human capital management, all those things that border on ESG. That's why we think those things are really important as well. In a new world where it's not so much hardware that generates profits, but software, human capital, customers, brand, those factors mean ESG and long-term investing are much more important.
Yeah, tech and ESG certainly go together in the same conversation. Rick, thanks so much for joining us. Richard Lacaille at State Street Global Advisors. Thanks very much for staying with us. Let's get an update now on some of the first word news stories we need to be across. Here's Ritika Gupta.
Thanks, Hannah. Hurricane Laura has made landfall as one of the most powerful storms ever to hit Louisiana. Maximum wind speed hit 150 miles per hour when it came ashore. Laura is also bringing the threat of a 20-foot storm surge and flash flooding. Several hours after landfall, Laura's winds had died down to 120 miles an hour. Still, it was a Category 3 storm. There's concern that it could make some areas uninhabitable for weeks or even months. Vice President Mike Pence says America's economy is on the way back. At last night's Republican convention, Pence praised President Trump for the way he's handled the economic crisis caused by the pandemic.
Because of the strong foundation that President Trump poured in our first 3 years, we've already gained back 9.3 million jobs in the last 3 months alone. And we're not just opening up America again. We're opening up America's schools.
Pence also encouraged voters to question whether Joe Biden is, quote, nothing more than a Trojan horse for the radical left. The CDC is defending new controversial guidelines on coronavirus testing. The guidance says that asymptomatic people may not need tests. Many public health experts say it's a wrong turn that could restrict the number of tests performed. The CDC says that the change was not influenced by the White House, and it's meant to clarify the limits of testing. Tension is rising between the U.S. and China over the South China Sea. Chinese forces fired 4 missiles into the disputed waters. At about the same time, the U.S. imposed trade and visa restrictions on Chinese companies that helped set up outposts in the region. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Anna.
Thanks very much, Ritika. We're keeping an eye on Hurricane Laura, building up to coverage of Jackson Hole. And I should tell you that coming up later today on Bloomberg Markets, we're going to be speaking to the Visa CEO, Al Kelly. That is 5 p.m. in New York, 10 p.m. in London. This is Bloomberg.
things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
Where we fought for free and fair trade, and this president stood up to China and ended the era of economic surrender, Joe Biden has been a cheerleader for communist China. Because of the strong foundation that President Trump poured in our first 3 years, we've already gained back 9.3 million jobs in the last 3 months alone. Too many heroes have died defending our freedom to see Americans strike each other down. We will have law and order on the streets of this country for every American of every race and creed and color. We're on track to have the world's first safe, effective coronavirus vaccine by the end of this year. And we're not just opening up America again. We're opening up America's schools. After all the sacrifice in this year like no other, all the hardship, we're finding our way forward again. So with gratitude for the confidence President Donald Trump has placed in me, the support of our Republican Party, and the grace of God, I humbly accept your nomination to run and serve as Vice President of the United States.
The gentleman from Indiana, Mr. Pence, of course, speaking about his great president, Donald Trump, pretty much as expected. A number of the zeitgeist types are looking at fact-checking in that, but there is the vice president in support on day 3 of the Republican National Convention. The president will speak tonight. Right now, we will speak to Thomas Gift. This is a wonderful industry in the United Kingdom. Really, really smart people out of the United States providing U.S. wisdom off the platforms of the great schools of the United Kingdom. At UCL, Thomas Gift, and of course, for years at Duke University. Thomas Gift, I would assume that Mr. Pence was speaking to the suburbs of Raleigh, North Carolina. You know a lot about that. How is he speaking to the suburbs like Morrisville and the rest of Raleigh, North Carolina, differently than Mr. Biden or Senator Harris will speak to those suburbs?
Well, Donald Trump is really the first modern American president who hasn't sought to broaden out his circle of support beyond his core partisan base. And the Republican convention so far is a really good encapsulation of that strategy. As you suggest, kind of the bread and butter voters that he's talking to are exactly like those ones in North Carolina. By and large, Republicans are sticking to the standard GOP playbook. They're maligning Democrats as purveyors of socialist policies and Biden as captive to what they call the radical left mob. That's what we expected going into the convention, and that's what we've gotten so far. We've heard some about policy, but more so about opposition to Democrats. In fact, Republicans have offered even no official party platform, which some say is a reflection of the fact that this is really all about Trump. It's about his leader and his ability to speak to those core demographics like the ones that you just noted.
What will be the distinctive emotional item for suburban voters when we go to November? What's the thing that's going to tip them this way or that way?
Well, it's probably going to be 2 issues. One is definitely the economy. And so if Trump can make a reasonable case that the economy is on the upswing, that could make a difference. Some voters, maybe if they're not enamored with the current president, with his tweets, with his personal behavior, with his personal character, they still may say, well, we had a good economy prior to COVID-19. We had record lows in terms of unemployment for certain demographics. Let's get back to that. If Trump can make a compelling case that that will happen, I think he has a really good shot at reaching out to those voters that you just mentioned. The other issue really is law and order. And so against the backdrop of a lot of the social unrest that we've been seeing in recent days and weeks, going all the way back to George Floyd and prior to that, Trump is trying to pivot this discussion, to make it about kind of law and order, to say, the Democrats with their agenda of defunding the police or minimizing support for the police isn't a good strategy. If they can kind of make that case to some suburban voters, it may resonate.
Thomas, good morning to you. Given the lead that Biden currently has in the polls, what is it that could close the gap? Is it possible that some substantial progress on the virus could reflect well on the Republican Party and that gap closes?
Well, that's certainly the case. And if Trump can make a compelling case that there is an imminent vaccine before November, I think that could really tip the scales of this election and make it much more competitive. Right now, Joe Biden does have a significant lead. It's a comfortable lead. It's about 8 percentage points in the national polls. Of course, that number is slightly more narrow in some of the key swing states like Pennsylvania, Michigan, Ohio, and Florida. But if voters feel like they can see the light at the end of the tunnel, that Trump can make a case that, we know that we've gone through hard times, we know that we can kind of get through this, then, I would expect this race to really tighten up in a hurry. This is not over yet. I think Biden has really recognized that, and he's repeatedly said, yeah, it's not over.
And just briefly, Thomas, what do we expect to hear from President Trump himself? Will he keep talking only to his base, or will he try to broaden the appeal?
Well, the best predictor of future behavior is past behavior. And I think Trump's Make America Great Again rallies are probably the best harbinger if you're looking to forecast the themes that the president will touch on during his speech. Certainly, Trump will double down on his claim that progressive Democrats are seeking to change the fundamental fabric of the country, say that Biden, or at least powerful forces within the Democratic Party, want to dramatically expand the role of government, undermine religious and traditional family values, and be passive in maintaining law and order. So to the extent that he does talk about his own record in the White House, he's going to speak to some of these issues that his base unequivocally supports: tax cuts, hardline immigration policies, conservative judicial nominees, and a tough stance on China.
Dr. Gift, thank you so much, from UCL today, the director of their Center on U.S. Politics. We're going to have much more coverage, of course, tonight. David Weston, the final night of the Republican National Convention, tonight, 9 p.m. on Bloomberg. Stay with us. Futures at -9. Ann and I are watching the 10-year real yield into the Powell speech at -1.06. That's a wow statistic. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question. Good morning, I'm Anna Edwards in London with Tom Keane in New York. US futures weaken a little as we wait for Jay Powell later. Now, Salesforce plans to cut about 1,000 jobs as the company moves to streamline its operations. The cuts come even as it reports record quarterly revenue and forecasts further gains. The Salesforce CEO, Mark Benioff, spoke with Bloomberg's Emily Chang about how the company is adapting to challenges brought on by the pandemic.
We've seen so many of our customers go through so much difficulty this quarter, but I think that we can look at this quarter and look at everything that's happened with Salesforce, and we so strongly believe business is the greatest platform for change. I mean, we continue to work with our customers and use our Customer 360 platform to help them transform their businesses to get closer to their businesses. And at the same time, we're very much looking at this as a victory for stakeholder capitalism. We've been able to deliver a great return for our shareholders. You just made that very clear. Well, that's a 5,000% return since, we went public in 2004. It's also a strong return for stakeholders. We've done millions of hours of volunteerism. We've been able to give away hundreds of millions of dollars. We run over 50,000 organizations for free in our service, primarily nonprofits and NGOs. And you can even look at our local San Francisco and Oakland public schools where we live, Emily, and you can see we just delivered another $20 million this quarter to them, which brings our total contributions to over $120 million to our local public schools. Maybe that's what I'm most proud of this quarter's accomplishments.
Now, let's talk about whether the growth in the cloud is sustainable, or if you're seeing a pull forward in. Does it mean things will slow down when we come out of the pandemic and shift to whatever new normal is?
Well, we've seen this as a long-term growth driver. Salesforce is now 21 years old. We've done many interviews together, haven't we, over so many years? And the reality is it's basically the end of software. Everything has moved to the cloud. Salesforce is the largest enterprise applications company. We've made our name on the idea that you can easily get value from this cloud solution, that it's fast to install, fast return on the investment, that the transformation that you want for your business, regardless of scale, can happen instantly and powerfully, and that you can get tremendous ROI. And this is why Salesforce continues to grow. You can see today, Salesforce will do more than $20 billion in revenue this quarter. That's amazing. And we've have more than 54,000 employees. This really allows us to serve any customer in any part of the world, and also demonstrates that the cloud is real and here, forever.
It's the end of software, Mark. Those are some fighting words. I wonder how some of your competitors like Microsoft would feel about that. I thought about Mark Andreessen once saying software will eat the world. Do you think we're entering a new era for technology?
Well, the end of software, I said that first in 1999, Emily, so I had to pull that out of my old tool chest. Now, I just so squarely believe that we needed a new software model, a new model based on the cloud, a new business model, where customers pay as they go. And look, we also need a new philanthropic model. These traditional software companies have not been the most generous or philanthropic to their communities, as you know. And that's why I started Salesforce. You're right, I left Oracle now almost 22 years ago. And when I did, I really took those three goals. Can we create a new technology model? Can we create a new business model? Can we create a new social model for business? And we're trying to inspire a new industry, a new set of values based on trust, on customer success, on innovation, on equality. We're trying to inspire stakeholder capitalism. That capitalism itself, well, you know, the traditional capitalism is dead. That we need a new capitalism, a more sustainable and more just capitalism, a more equitable capitalism. And we're trying to be an example of that, certainly where we are headquartered in San Francisco, but really and everywhere.
Mark Benioff, and what's so important there was that single sentence where he took to task the rest of technology for the philanthropy, where he's provided real leadership. In the background, I might point out, over the left shoulder of Mr. Benioff is one of the best mandolin collections in North America. He and I have gone back and forth on this, and he has an exquisite collection of mandolins. We're going to give you an exquisite data check right now, -8 on the SPX, Dow futures at -91. The VIX goes from 21 up to 23.40 over the last, say 48 hours or so. We're watching that real yield, -1.06. That's a wow statistic. Jerome Powell at 9:10. Stay with us. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with a 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it. That makes me confident that we are going to do everything we can to determine safety.
Good morning, everyone. Bloomberg Surveillance. We welcome all of you. Here is Jerome Powell today, a very important speech. He will bestow gifts on the market. That, according to James Karen at Morgan Stanley. Mr. Karen looks for a weaker dollar. Our Michael McKee, he will not be having his game day Mountain Man breakfast at the acclaimed Pioneer Grill, as this Jackson Hole is virtual. It is the clear and present danger of Hurricane Laura. Landfall winds the most since 1856. Rob Carolyn in moments. And you won't be safe in Joe Biden's America, so says Vice President Pence. Meanwhile, the former football coach of Notre Dame says Mr. Biden is, quote, Catholic in name only. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Anna Edwards in for Francine Lacroix in London. Anna, I want to go over to the EU. This is a story off our radar in America, but the EU has a bit of a people riot going on, a people debate going on in their senior ranks.
Yeah, absolutely. So the Trade Commissioner, Phil Hogan, forced to resign because he attended a golf event, which in normal times would not be that controversial, but these are not normal times. And apparently, it's being investigated as to whether it broke the COVID rules in Ireland. As a result, he was under pressure. He had to defend himself, and eventually he had to resign. Now, Ursula von der Leyen at the European Commission needs to find a new person to fill that really busy trade portfolio, that trade brief. But this sets a really interesting precedent. Are we going to see other commissioners held to this kind of bar?
Unseemly in vacation August across continental Europe. Let's do an unseemly data check right now. I'm going to focus here quickly to get to Rob Carolyn on Hurricane Laura. Futures -8, and we're watching the real yield, which is a -1.06. Out to 4 digits, it's -1.0569. That is a huge deal as we go into the Powell speech. Anna?
Yeah, on my data check, I've got European equity markets waiting for that Powell speech then, so on, we're down by 0.3%. One big faller in London worth a mention, and that is Rolls-Royce. We heard from Rolls-Royce a little bit earlier on that they reported a huge loss. This is the maker of aircraft engines, not the luxury cars, of course. And the stock down 7.8% in London right now. They get paid by the hour, essentially, for flying these engines in the sky, and when they're not flying, they don't get paid so much. So a big restructuring effort underway at Rolls-Royce, something that, you know, these are the kind of jobs that governments get themselves excited about, aren't they, Tom? These are sort of highly skilled engineering kind of jobs, the jobs that no government wants to see lost.
Very good. To the hurricane, Rob Carolyn is wonderful, our Bloomberg meteorologist, and we're going to do some science now. And we're going to go to Randy Newman, Louisiana, 1927. Rained real hard, and it rained for a real long time. Rob, is a hurricane about the saltwater flood that doesn't recede, or is it about the torrential rain?
Well, it's about the saltwater flood that doesn't recede along the coast, Tom, and then as the storm goes inland, it ends up being the rain that causes the big issues. Right now, we've got numerous flash flood warnings in effect through mid to late morning across most of the western half of Louisiana and extreme eastern Texas. The storm made landfall over Cameron, Louisiana at 2 o'clock this morning Eastern Daylight Time. Went in with winds of 150 miles an hour. The highest gust they've seen so far was at Lake Charles, Louisiana. They reported a gust to 128 miles an hour after the storm made landfall. It's almost due south of Shreveport right now, moving to the north at 15 miles an hour. It's going to weaken rapidly. It's the 5th strongest storm to strike the continental United States, the strongest hurricane to hit Louisiana since 1856. There are now over 200,000 people in southwestern Louisiana without power. That number will just go up as the day goes on. We have a tornado watch in effect for much of extreme eastern Texas and most of Louisiana through 8 o'clock this morning. Look for that to expand northward later today. The big problem will be the rain with the system. The system is going to kind of wind down very quickly in regards to its winds now that the eye has moved inland. I can already starting to see on radar out of Shreveport that the eye is starting to fill in, but it will be the rainfall along the path of the storm today across Louisiana on up into Arkansas. Later today, the system will weaken to a tropical storm. It's probably going to put down about 4 to 8 inches of rain, and then it moves across southeastern portions of Missouri as a tropical storm. By tomorrow morning, it should be downgraded to a tropical depression as it crosses the Tennessee River Valley and the southern Ohio River Valley. It goes through the mid-Atlantic region as a depression Saturday, and then south of New England early in the morning on Sunday.
Okay, so that's the full mapping out, Rob, and I guess anybody who's in that path will be hoping it keeps moving and doesn't drop too much of that rain all in one place. Sunrise, I think, is in around half an hour's time around Cameron in Louisiana. When sunrise comes up, what kind of damage do we expect to see then, Rob, to that bit of the coastline and further into Lake Charles?
Well, considering that it went in with winds sustained at 150 miles an hour, Anna, it looks like we're going to see probably catastrophic damage. I would imagine the power grid down there is going to take weeks to replace because of the damage to, more or less hundreds of miles of power lines and poles. We're probably going to see structural damage, especially to high-rise buildings. I've seen video already this morning of small vehicles being overturned, glass being removed from high-rise structures. It's going to be pretty bad across that area. I mean, fortunately, where it went inland, it was a little further east than what we were thinking at this time yesterday, so perhaps the damage won't be quite as bad around Port Arthur and up towards Beaumont, where we've got some of those refineries. But anything that was along the path of this storm, it's more or less like you're dealing with a tornado about 120 miles across from the area where it hit the coast in Cameron to the areas that are south of Shreveport. So there's going to be substantial structural damage along the path of the storm, continuing right through mid-morning.
Rob Carolyn, thank you so much. And of course, more of his reports, particularly on Bloomberg Radio, through the important East Coast and across this nation morning as well. With our first word news in New York City is Ritika Gupta.
Morning, Tom. Anna, Mike Pence accepted the Republican Party's nomination to be President Trump's running mate again. On the third night of the convention, Pence praised the president and blasted Joe Biden.
Where we fought for free and fair trade, and this president stood up to China and ended the era of economic surrender, Joe Biden has been a cheerleader for communist China. He wants to repeal all the tariffs that are leveling the playing field for American workers. And he actually criticized President Trump for suspending all travel to China at the outset of this pandemic.
Pence spoke from historic Fort McHenry in Baltimore. A white 17-year-old police admirer is being held after two people were shot to death during violent protests in Kenosha, Wisconsin. Demonstrators were protesting the police shooting of a black man. The teenager was arrested in Illinois after about 15 miles from where the shooting took place. Meanwhile, more National Guard troops were sent to Kenosha and a curfew was imposed. Protesters ignored it. The National Basketball Association started a boycott over police shootings. Now it has spread to baseball, soccer, and women's basketball. That led to a number of games being cancelled. The NBA protests could lead to the playoffs being scrapped. And in Japan, a top aide says Prime Minister Shinzo Abe should be able to serve out his term as party leader. That would end about a year from now. Recent hospital visits have raised questions about Abe's...
How did he do that?
Well, in terms of religion and politics, Joe Biden is making a pitch to the Kennedy Catholic constituency of decades ago. And in fact, if you go into working class communities around this country, Catholicism does have a history of aligning with union workers dating back again to the Kennedy Catholic era. That said, however, it was quite remarkable in Vice President Mike Pence's speech last night, where he also has deep ties to the evangelical Christian base in American politics. He made the notion that America is a country of miracles. That was one particular moment that stood out. Beyond that, looking forward to tonight, President Trump is going to speak not just to the working class base, but trying to make inroads in those suburbs. I was struck by this, Tom, and I went back and did my homework on it. In 2010,